No doubt that 2021 has been a brutal year for Alibaba shareholders as Alibaba stock is down something like 50%. And I'd argue it's gotten even worse recently as fund managers are looking to blow out of the position by year end for window dressing. They do not want to show to their investors that they've owned this dog. They're too embarrassed. And you have a lot of folks just blowing out of it, another forced seller, I'd argue, looking to lock in the tax loss. And so you have this dynamic just making the situation worse. And it makes you wonder, is it possible that 2022 could be a nice year of recovery for Alibaba shareholders and for Alibaba stock? I'm personally optimistic. There's been some data points that are very favorable that I'll talk about in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and I did own stock in Alibaba shares 9988 on the Hong Kong Exchange at the time of this video publication. So no doubt, there's been a lot of scary headlines about Alibaba and many Chinese stocks over the last few months. Most recently, one of China's largest property developers, Evergrande, officially defaulted. That's a big deal here. I did a prior video on Evergrande and how that could play a big role in terms of impacting China's economy, recognizing that real estate in China plays a much bigger role in their economy than, let's say, in the US or many other economies. This, among other concerns like high energy prices and CCP regulation, is creating the risk of a shock to the Chinese economy that can further crush these Chinese equities like Alibaba. And we've seen this play out with lower than expected retail sales recently that also caused Alibaba stock to sell off significantly. There's been some data points for a favorable 2022, however. For example, it looks like the tone of the CCP is changing, where they're now less focused on antitrust initiatives, many of which targeted Alibaba, and more on tech development and growth. That is a big deal, in my opinion, because Alibaba is a pioneer in many of these growth developments and saying, hey, we're less focused. The CCP is less focused on busting and breaking you up and more focused on saying, hey, how do we make sure we have social stability and growth? That does fit into Alibaba's wheelhouse. In my opinion, this is a very favorable signal, while recognizing that many of the old e-commerce marketplace policies that got them in trouble, like forcing merchants to effectively pick one platform over another, very monopolistic type practice, is likely over. Alibaba management just finished their 2021 investor days, and management is making the thesis clearer, and it remains compelling in my opinion. I think the risk reward is quite compelling. Despite a slowing economy, and I'd argue relatively weak growth in their core profit segments, check out my prior video on their third calendar quarter 21 results that sort of gives the detail on what I'm talking about there. Their core commerce segment generates around $25 billion in after-tax profit. That's give or take $1 billion. So that's immense. That's a huge cash cow. And this business alone is arguably currently valued, just based on the current market cap, excluding everything else, 12 times earnings. Just that core segment. And you can see how they're making these investments in all sorts of other things. This core business is unlike nearly any other company in the world. I mean, look, you have 953 million annual active consumers, and many of these customers are extremely sticky. For example, the cohorts that spend between 2 to 7,000 RMB, the annual retention rate is 96%. For those that spend 7,000 plus RMB, the retention rate is 98%. This is part of the reason why their platform will likely continue to remain extremely lucrative in the future. The reality is they have repeat business. That means they don't have to spend a lot on marketing to those customers because they know they're going to keep coming back. If someone else wanted to compete and get those big spenders, that would take a lot of marketing dollars. So that is part of the reason why they are so lucrative and will continue. This core segment will continue to generate arguably a lot of free cash flow. The reality is that they're innovating to address new types of marketplace demands as well. They're not just sitting back and saying, oh yeah, we're just gonna ride this one segment. They're making a lot of bold bets, like local consumer services, which includes manufacturers shipping straight to the consumer, and discounted grocery pickup in less developed markets. They also have a consumer-to-consumer used marketplace for younger users looking for a good deal, as well as timely restaurant and grocery deliveries. But these and other initiatives cost a lot of money, and they aren't at maturity yet. They aren't at the profitability scale that some of their first business segments were and are currently. Another huge bet is on their international expansion. For example, they aim to grow their Southeast Asian marketplace, Lazada, by hundreds of % in the years ahead. Their current valuation, this current valuation for Alibaba gives zero credit for all these other segments. You can see, look, this is the one that's profitable. This is the one that's profitable. All these other business lines are unprofitable. Now, these are just businesses that are earlier in their growth curves and are unprofitable. I mean, it doesn't make any sense, in my opinion, to say, oh, yeah, we're going to value this business almost solely off of a subset of their Chinese commerce. Not even the full thing, just a subset of it. Taobao, Tmall are the primary drivers, I'd say. Another way to think about it is that a tiny corner here of Alibaba is a cash cow, and that's looking at this entire picture here. This tiny corner over here is generating 20 to 30 billion in free cash flow. That's approximately, it's a range. 20 to 30 billion in free cash flow a year. They're going to take most of that cash. Now, some of it will get returned to shareholders as a buyback, which I like, especially because the stock is cheap, and they've been accelerating that recently, which is a smart move by management. But they're going to reinvest a lot of that free cash flow to grow all these other businesses. I mean, whether or not it's international commerce, digital media, local services, logistics, cloud solutions, growing all these things to scale. This strikes me as a huge advantage over time that the investment community is currently overlooking. Because if you wanted to do this as a standalone business, it would be a lot harder without a $20 to $30 billion cash cow that's subsidizing it. That is a key point that investors, I think, are missing out. They're not giving any value to the optionality of these segments. That's really the heart of it. Now, while I like the setup with Alibaba, investors have quickly learned that it's not a smooth ride. I mean, this is China, after all. They can be, there will be rough times and a lot of turbulence. We've certainly seen it in 2021. There have been recent rumors, just earlier today, about Chinese securities regulators working with the U.S., greater, partnership there that could lower the risk of potential delistings that way. But that there will always be that headline risk. Personally, I'm not that worried about it, given that I own the Hong Kong shares. And there's always broader concerns of potential geopolitical upheaval. Online, you also have a lot of talking heads, effectively say, oh my goodness, this VIE risk. But personally, I don't really think that's a big concern, as it's almost never raised as an issue specifically about Alibaba by the CCP. And so I'd argue that's a big nothing burger that, folks that aren't really close to the situation are mindful of. In short, I still like Alibaba and think as they take their free cash flow and reinvest it into faster growing initiatives, they can accelerate their trajectory and future profits. They have a bold vision to reach 2 billion consumers by 2036, and I bet they'll achieve it. I think the current valuation for Alibaba doesn't take into account their significant initiatives, and I'm going to hold on for what I think is significant upside from here. I'm excited to have Alibaba as part of my own personal investment journey, although it's not my largest position, as I think there are others with even better risk reward. I call those out on a monthly basis, to my Journey subscribers. If you're interested, go to unrivaledinvesting.com, click on join the journey each month. Last week of the month, I call it a potential multi-bagger. First week of the month, I call it my full portfolio. And we also have a dedicated community on Discord where investors, share their thoughts, and we're all trying to learn together. So if this video, has been helpful for you about Alibaba, please make a point of hitting that subscribe button, hit that thumbs up. And I'd also love to hear your thoughts, on Alibaba, if you think that maybe I'm missing something. And as always, if there's an unrivaled company that you think's out there, regardless of the valuation, leave a comment below, because I love to learn about them, and I chronicle a lot of my learning about them on this channel, even if they're overvalued. If they're overvalued, I'll call it out and say, hey, maybe there's a lot of downside. And I've done that with certainly a number of companies that have, gone down significantly. So it's, leave a comment below, because I'm always curious to hear what everyone else is very interested in. And I hope this video has been helpful for you. Thanks so much for tuning in.